Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, Wednesday, May the 10th. Today is a big day in which CPI came as expected and even a little bit lower on the headline inflation rate year over year. We are going to talk about that and also some earnings. Wednesday, we are going to talk about Rivian, Airbnb, and also analyze the CPI report and also some interesting data regarding probabilities and how the markets are reacting in terms of pricing in new interest rates. So first, NBA 30-year mortgage rate came a little bit lower, but look at this, refinance index coming higher than before, and applications coming from negative to a big 6.3% in May. This means that even though inflation is still high, interest rates still high, people, households, families are starting to see the end of the tunnel in terms of Fed maybe cutting, pausing, lowering interest rates. So they are trying to apply for new mortgages and refinance those that they had prior this huge interest rate hike and maybe finding good, better deals on their mortgages. So this looks like consumers and people are actually thinking about maybe the Fed will start pausing and holding, and maybe at the end of the year will start cutting, so lower rates. But let's focus on inflation. Headline inflation month over month 0.4 as expected and 0.3 higher than the previous one. Higher. Year over year, slightly decreased from 5 to 4.9. We were expecting 5%. So inflation rate still increasing. Core inflation rate, as expected, a little bit lower than before, but still going up. And month over month, as expected, 0.4, but still going up. So as expected in this case means as feared. We were hoping maybe for an ease softening on inflation, maybe to convince Fed that they need to actually pause, but looks like not. Before moving into the actually report and seeing the probabilities, let's talk about earnings real quick. Rivian reports narrower than expected quarter loss and reaffirms EV production target. So reaffirming targets, it's always good for the markets. And as you can see in the charts, this is the 1 minute chart for Rivian. We were gapping up into the overnight, and due to the inflation and maybe lower consumer expectations and entering recession, Rivian is actually giving back a lot of its profits. But in terms of investor, we were up 9%, 9.57. And since the open, we are actually down 4%. So let's see the overall picture, because I think Rivian is being hit a lot due to the competition, fierce competition from Tesla, from Lucid, and from other automakers that, I mean, let's see, 2 consecutive good earnings from Rivian, and it's a good price right now. I'm not investing in that. I'm not investing in any of these sectors, but I think it's being beaten down due to macroeconomic circumstances. The other one that I would like to talk about is Airbnb, that is focused on consumer spending, traveling, and holidays spending. This is a seasonal indicator. Airbnb drops 10% after earnings offers cautious outlook. We are moving into a recession, and spending for traveling and for Airbnb and all these kind of luxuries, it's demand is going down, basically. 80 cents versus 9 cents expected, good. Revenue, good. But the expectations, markets are always ahead of themselves, and we are seeing 6 to 12 months ahead. So if we check the charts on Airbnb, I mean, this is the daily. For the 1 minute chart, people are actually trying to buy the bounce due to good earnings, but the outlook is what killed Airbnb today. 12% in the overnight, almost 20%, and since the open, people are actually liking 3.68. Quite interesting moves in different sectors. And let's see, this is a real gauge of consumer spending in traveling and all that. Remember that airlines are feeling the pressure of lower demand and bad outlook, Airbnb also, but that doesn't mean that they are good deals. In terms of daily, Airbnb is 131 is the line on the sand, and we are actually trying to hold this 200 moving average after this decrease, trying to basically recoup this 131 and maybe start going seeing higher. But this is a channel for not for investor. I'm just covering the earnings due to the information they provide in terms of context on the economy and consumer sentiment. And that's why we are here, basically. So let's see first, before moving into the report of the inflation, let's see the breakdown. We all know that eggs are an outlier of this inflation, but let's see the good news. Good news, fuel oil minus 20%, gasoline minus 12%, and used cars and trucks minus 6%. This is the good news. Energy overall minus 5.1. We all know that crude oil is pulling back and overall the energy sector is pulling back, but still, food 7%, food at home 7%, financial services, motor vehicle insurances, eggs, motor vehicle repairs, 20%. Look at this. So basically, if we check the actual numbers, we can see that in terms of food, we have flat minus 0.2 and 0.4 is not that bad, but we are still seeing prices and adjusted is 7.7 and 7.1 respectively. The big decrease is in energy. Gasoline is 3.1 minus 12 unadjusted. And look at this, fuel oil minus 4, utility piped gas. If you didn't check natural gas chart, I would encourage to do so. Just check that chart. It's unbelievably low. And let's see the big problems. Used cars and trucks, 4.4%. And services. Fed focuses on this section. Shelter is 0.4 for April and adjusted 8. Transportation services 11 and adjusted minus 0.2 for April, and medical care services minus. So there's still a lot of issues. Energy is going down, offsetting some of the other outliers, but we are still seeing 3s, we are seeing 4s, 2.7s. We need inflation to really show signs of deceleration and maybe going down. This is the probabilities for the next 14th of June FOMC, 10% of probabilities for another 25% hike, but overall consensus is with 90% of probabilities just pausing. If we check futures meetings, we see a double pause and start cutting with 51% of probabilities in September. another 25 basis points in November, and another 25 basis points for a 75 basis point interest rate cut this year at December. I don't share this approach. I don't share this vision. I don't think we are going to cut 75 basis points this year. And Goldman Sachs and Barclays are already saying be careful because we think that markets are maybe misaligned with the Fed. So several banks are already saying that markets might be ahead of themselves and too positive in terms of interest rates cuts this year. Fed clearly stated that they don't plan to do any of those interest rate cuts. So that's the thing, that's the tricky situation. Let's focus now on the charts. Let's start, as always, with the Nasdaq. The Nasdaq on the 30-minute chart provided a nice setup on this descending trend line that we actually broke at 8:30 with the inflation number. I had a buy limit order up here at pre-market high. I sold when I could, basically due to the lack of liquidity around this blue line that is the daily level that we've been pushing, and also the blue dot line that is last week high. So I basically sold in the entry was 289 to was 345. So 57 points in 10 seconds. That was nice. I'm used to trade this kind of news, and I have a data provider that is really quick providing these numbers. So as soon as I saw the number, I just put the order, I got filled, and I just sold whenever I could at this key level. So apart from this trade, let's focus on the 1 minute because I was really positive due to this pullback, resolving higher and trying to make new highs of this blue dot line that is last week high, sorry. So 13,370 was a really key level for me to be held by the Nasdaq. This previous resistance is now support was nice to see at the open. I was long again at this level, or I think it was 20 points or something like that. Again, my target was last week high. I didn't want to get caught the same way that we did here and here. So we are in the green due to the push in pre-market with the news, but this is not showing a lot of strength, right? If we check Apple is just trying to decide if it goes or not. Microsoft 1.30 looks like more clear bullish to me, and with this kind of trend line being held into the ascending triangle at least, but look at these candles. Tesla flat, look at this, it completely reversed the move. Amazon 2.95, this is showing that consumer discretionary is looking strong. Amazon is doing its own thing, but I'm actually concerned about this 109 level. That is this close. We never closed above 109.82 on the daily. I would like to see a candle close above that to see if we can reach 114. But let me tell you, overall, this is lackluster movement. The same way that it's lackluster inflation deceleration in markets, the inflation number came as expected, but we wanted more. I wanted more actually. And people is just really not confused, but it's just a big meh. And this is how lazy the market is with this number. Markets should be skyrocketing if we really had amazing data. But we are not doing that. We are just at this small range of resistance that is super key, at least for me. If you see the chart, we can see that the S&P is, look at this, is also rejecting. It's the Nasdaq trying to do things today. If we check the 1 minute chart on the S&Ps, it's just a descending active sell-off. We are trying to hold, but we are again failing. So be careful, be careful. It was a nice move, emotional move, but big rejection, big rejection. The Nasdaq is stronger than the S&Ps, but that doesn't mean that Nasdaq cannot end up in the red. Right now, 0.66. So let's see if other markets can provide us with more information regarding the some sentiment. Let's talk about Bitcoin. Bitcoin is 2% today. 2% today. Looks like a big hit, but on the daily, on the surface, it's not a big green candle like those. It's just still in this consolidation. So this is not really a big move. Another risk on, let's see the Russell. Russell is big red candle. Big red candle rejecting. Let me just shorten this and make more clear that it's really rejecting this. I don't like this. So looks like risk on is not yet the theme of the day after the economic data. Let's see if Forex, let's see if the dollar index is strong. The 2-hour chart is clearly showing signs of consolidation down here, but big red candles, green red candles, big red candles, big red candles. I still have this golden pocket fib retracement, but it really stalled off after the numbers, and we are actually trying to recover. So dollar strength is actually bad. What is also bad? Yields going lower. Remember that yields are supporting this, and once we go below this, yields will not provide any more, let's say, incentive, and they will show actual recession. Remember that this is the 2-year and the 10-year. Those are actually correlated, and the correlation is called the yield curve, and we are at this pocket. We are in here. We are not deciding either go up or go down. This is the inverted yield curve. Zero is up here. We try to go higher on March, but we are still in here in range. So why are we waiting? Why are we not resolving this super anticipated CPI data with a big move? So the 2-year is red, the 10-year is red, and the interest rates for December this year are still pricing in more cuts, more cuts. So looks like markets are still worried, are fearing a recession. They are not focused on disinflation, they are focused on the recession because they want the Fed to cut rates. And if they don't get that, oh boy, don't be in front of a market that is not getting what it wants. So I think that's overall the markets that I wanted to share with you guys today. And also look at this. JP Morgan, all in the red. Wells Fargo, the entire ETF for the regional banking, Charles Schwab, MTV, Bank of America, Goldman Sachs, Morgan Stanley, Credit Suisse, PacWest, all in the red. All. So don't get too confident. I don't see market strength yet. I'm seeing weakness. And I'm showing you why, even though the data of inflation came as expected, I'm showing you why markets are not convinced. And at some point, you just have to read the markets, see the markets. What are these markets telling me? So most probably that they don't want to go higher. They don't like today's data, and they are feared. They are still feared, not only about the recession, but also about the negotiations regarding the debt limit. So those two are a big ones. So copper, Dr. Copper. How many times I told you in these channels, in these videos, look at copper. This is not good. If copper breaks down 3.8 and closes below, we might see 3.7. This in this hole, markets will be destroyed. Copper is the heartbeat of the market, of the economy, and it's a lead indicator of recession. If copper is going down, most probably we are in a very bad shape on the overall markets. So don't be dragged, don't be trapped about hope and maybe bullish sentiment out of nowhere, because these markets are not showing that. It's as simple as that. And that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates like this one, and market recaps. Cover all the news, economic data, earnings, and I provide you with deep technical analysis across the markets to really show you what I see, to really share with you the kind of trades that I like and the kind of moves and the potential of these markets. That's all I want, for you to learn and to really share with me this passion that is trading these markets. Discipline and risk management, as always, those are key for your success. We are approaching 1 p.m. Our hour might be interesting, but I don't feel it, guys. I already had my profit today, and I don't want to be greedy. Greed kills your account and your emotion. Be careful. Stay safe, everyone, and see you tomorrow.